Welcome back to Keeping It Real, as in real estate. The only show that looks at the real issues affecting residential real estate right here in our county and across the country. With our real expert, the real deal, Rosanne Nitti. Hey, Rosanne.
Hey, Paul. Good afternoon. Happy Tuesday.
Happy Tuesday to you, too, here. And welcome back to Getting Real here. We've gotten some really good response to this show so far, and I know you got a really good topic today.
Yeah, I'm happy to be here. And today I'm with Jon Rowland, a friend for, about 7 years now. We've been working together. He's with United American Mortgage, and we met when he represented a buyer in a loan on one of my listings, and I was so impressed, and we had such a good time that we've been working together ever since. And welcome, Jon.
Hi, Rosanne. Thanks for having me on.
Yeah, tell us a little bit about yourself.
I am originally from Iowa, and I came out to California in 1987 and started doing mortgage loans out in this area about that time. I've got a family. I live in Newport Beach, have 2 kids, and I work for...
Keeps you busy. College-age kids,
yeah,
right?
College age and one coming up on college age. And
so that does keep you busy.
Oh, yeah, that keeps you busy.
And working.
Yeah, and it keeps your wallet spending, too.
And we're getting you a little closer to the mic there, so just move in. There you go.
Yeah.
So your kids can hear you.
Yeah, there you go. Thank you.
Well, that's great. Well, welcome. We're happy to have you here. We're going to talk about reverse mortgages today. And one of the things that I think about when I think of reverse mortgages is a late-night television commercial with Robert Wagner.
Right.
And, what's a reverse mortgage? Is this some kind of a scam? And I know, as Paul just mentioned, people are living longer. They've got equity in their homes, especially here in Orange County. 65 or 70 is young here. We're still active and whatnot. So tell us what a reverse mortgage is and how does it work?
Yeah, a reverse mortgage is kind of a quasi-mortgage insurance product that you need to be 62 years of age or older to qualify for it. And the real attraction to the loan is there are no required monthly mortgage payments. Like a normal loan would have. You still need to pay your taxes and insurance on the loan, but you're not required to make the monthly payment. And for seniors, a lot of times that's obviously a very good thing because their income's limited, and it becomes a very attractive program. They're able to use the equity in their home to stay in their home, but not have to spend high dollar amounts to pay a mortgage each month.
That's great. That sounds good to me.
Yeah.
So who is eligible? Like you said, you have to be 62 or over. And does age affect the loan amount?
Yes. 62 or older, and age does affect the loan amount. The older you are, usually the larger loan size you can get. And so it's also for, I should mention, it's for owner-occupied properties. So it needs to be your residence that you live in. And part of the rules are that they want you to be living in the property. So that's an important part.
Only.
Right.
Got it. And so, how can they use the money? And can they buy another property with it? You said you can use it. Can they use it for anything they want? They can go on a trip.
Yes.
They can fix up their roof.
Yes.
Remodel.
All those things.
Or buy another property with that money.
You can use it for all those things. One thing I'd mention too is a common one that people use often is the way the loan works is they don't want to give all the money out at one point because they have kind of consumer protection for seniors.
Gotcha.
So you can get a lump sum out at closing, and then you would get a credit line also that could be used starting in year 2.
And that was interesting when you were telling me about reverse mortgages because, say, I only needed a specific dollar amount to fix my roof or do a remodel.
Yes.
But I had a lot of equity. I could still have that HELOC.
Right.
But how the monthly payment would work is I'm only paying on that small amount. So explain that to me again.
Yes.
And before you go there, we get somebody tweeting in already what a HELOC is. You all know, but...
Oh, we're sorry. Yes.
Sorry, home equity line of credit. Yes, sorry about that.
That's a real estate term for home equity line of credit.
We're going to stop you every time you do one of those things.
Yeah.
Okay, sorry about that.
Yeah, so you would just get more if you didn't take out the equity line of credit, if you didn't draw against it, not as much interest would accrue on the loan. So when you pay back the loan at the end, there wouldn't be as much balance due. Your monthly payment would not exist.
So we
you
don't have a
one.
monthly payment. We
Right.
just have, is it monthly interest or annual interest? How is that interest occurred?
Yeah, annually. It's just
Okay.
annual interest.
Okay, got it. And so explain to me just a little bit more in detail of how, give me an example of
Yeah.
how a reverse mortgage would work.
Yeah, so here's an example of one that I've done recently. The property appraised for about $500,000, and on a reverse, they're looking for about 40% equity in your property. So let's say on that $500,000 property, the overall loan was $300,000. So at closing, the borrower got $175,000, and they had a credit line for $125,000 that they could start drawing on in the second year if they wanted to, or if they don't want to, they don't have to. But that's just in place for them.
Okay, that's great. So that $300,000 can be taken in a certain amount up front and then
Yes.
a home equity line on the back end.
Yes, and that's a good question because there are some other options as well. The borrowers can take out a monthly amount also. So based on their age, they can draw, let's say, $2,000 or $3,000 out per month every month, and it will continue to come
Okay,
to them for
great.
the life of the loan.
Okay.
That's another way to do it.
Okay.
Or if they just needed it for 5 years, for example, they can figure out an also a monthly amount to draw out that way too. So that there's a lot of different options. on it.
Interesting. Yeah. So tell me, what about paying it off? Say you took an amount,
Mm-hmm.
and most of the time, what happens here is this balance that's due gets paid when the occupants pass away or
Generally,
when they
yes.
sell the home. And I think that's one of the misconceptions with is that, oh, they're taking advantage of old people, and when they die,
Right,
you know,
right.
they all this goes to the big fat bank,
Right,
right?
right.
And then the heirs are upset because now they don't get to go to Tahiti and live or
Right,
whatnot,
right,
right?
right.
So then we're looking at, if I were to sell the house,
Right.
I still owe that balance and
Yes.
all the fees and whatnot in any other pre-existing mortgage I might have.
Right.
So that's something to think about too when taking out a reverse mortgage.
Right. So when you actually take out the reverse mortgage, there would be no other loans on the house. It takes care of all those loans in
It
the
pays
beginning.
anything off that
Anything
might
must
be
be
outstanding.
paid off. That's
Okay.
right. And then if the borrower passes away, like you said, the heirs would get the remainder of whatever the equity was after the sale of the property. That's
Okay.
correct. Or you could refinance out of that loan also into a regular conventional loan with monthly payments if the borrower could qualify for that.
I see. And so back now, that's an interesting question too, is qualifying.
Mm-hmm.
They don't have to show any sort of income.
Yeah.
It's based on the equity of their home.
Yeah, so it is a little bit. So they still have to go through a little bit of financial analysis
Okay.
because they do want to make sure that the borrowers can afford the taxes and insurance payments also. And then they also do want to look at the credit because they want to see what other debts they have. So there are some calculations for that,
Okay.
but they aren't the traditional ones that they have on a regular mortgage. They're more lenient.
Gotcha.
So that the seniors can qualify for those. But they do want to be responsible in making those loans and making sure that the clients actually
Understand.
they understand the taxes and insurance payment, and that it's a reasonable and affordable expense for them to pay in getting this loan.
Interesting.
Yeah.
I loved when I found out more about it because it really made sense.
Yeah.
And I referred you a couple of clients that were still just a little too, they were on that verge. They were like
Yeah.
62, 63, or just turning.
Yes.
And even though they had equity in their home, that affected the loan amount that they could take,
Right.
correct?
Wasn't quite enough
Yeah,
to
yeah.
get them over that number that they wanted to go
Right.
for.
So what happens in that case?
So in that case, what we would have to do is we would have to look for some other type of loan that we might be able to do for a client like that. Because what we do is when we figure out what loan amount someone's going to qualify for, we put all of this data into a program, and it kind of kicks out the number. And then the next thing we have to do is just figure out what the value of the property is. That's kind of the last piece. But if we're short, there really isn't much else we can do. Either they make it or they don't make it on the reverse, and we have to go to some other kind of financing if that's the case.
Some creative financing,
Yeah.
and that's where you're a pro at, creative financing.
Yeah, that's another thing.
I love
right,
that.
right.
I always send you all my difficult stuff.
Those are my favorite, yeah.
So in one case of a friend of mine that I sent to you, we just really advised him to wait a little bit because he didn't really have some other options
Right,
like that.
Right. Yeah, it can work really well for clients that are at the bottom at 62 years old, but it seems like it really works well for properties that are free and clear, people in their 70s, 80s, 90s, where maybe they're running up against some new expenses, but they still have this free and clear property, and they just need a few $100,000 to make things work and stay in their property. It's just ideal in that situation for the most part for people.
Sounds good. Well, we're going to take
Yeah.
a short break, and when we come back, we'll talk a little bit more about loans and what Jon does and how we can both help people buy or take loans out. And I was a little bit more curious about some other things with these reverse mortgages.
Yeah,
So we'll be
sounds
right
great.
back.
Imagine what it would feel like to lose everything: your job, your home, your family, your dignity. This has happened to thousands of the men, women, veterans, and young adults we serve at Working Wardrobes. What do we do to help? We provide career development services, life skills workshops, job skills training. We provide the perfect interview outfit, and we get clients placed in jobs. Call Working Wardrobes, 714-210-2460. Donate, volunteer, invest, hire.
Everyone knows that moving is one of the most stressful times in a person's life. And the worst part? Searching for cardboard boxes. It's absolutely prehistoric. Digging through dumpsters, going from store to store, buying stacks of them you're only going to throw away later. Well, now there's an answer. Bungo Box. Bungo boxes are durable, stackable, eco-friendly, plastic moving containers that will cut the cost of your packing supplies in half. And they're made of hard plastic, which gives you much more protection for your precious belongings. Much better than cardboard. Bungo boxes hold over 100 pounds per box, plus our boxes never, ever need tape. That's right, no tape. But since our Bungo boxes come with fitted dollies, your movers will move at the speed of light. So whether you, your friends, or your office are moving, there's really only one solution: Bungo Box. Find out more at bungoboxoc.com. That's bungoboxoc.com. Or call 714-725-7292. You order them, we deliver them. You move, we pick them up. That's bungoboxoc.com. All right. Well, we're back with Rosanne Nitti talking about reverse mortgages, and we've had a couple people tweeting in here. I just wanted to sift through some of them here and ask you some of the hard ones here. Who issues these loans? Are they big banks? Are they little companies? Are they big companies? Do we have to worry about who we pay? How do we pick one over another? Is that your job, or
yeah, that's a good question. The big banks have kind of moved out of the reverses a little bit. There's more mortgage banking companies that are doing this these days. They are insured by FHA. The HECM mortgages are, so they're backed by FHA, which makes them solid. And that part of it's the insurance part of this program, which makes it available to do these type of loans. So yeah, they're very, very secure, and but mostly done by mortgage banking firms. Some of the big banks do them, but they don't, not as much as they used to.
Is there a rating on them or something? You know, for example, I have a rental property. So when I had to get rental insurance, G1 is out-of-state carrier versus an in-state carrier, and one's a AAA and one's a B, and all these things that I had to learn about, all these different ratings of insurance companies. Are there similar ratings for mortgage products, or are they all the same?
You know, I don't know. I think you can do some research a lot of ways, but looking online and looking at people that do reverse mortgages and checking them out. So I think some of the names you would recognize also, but also talking with the individual loan officer and finding out what their knowledge is. I don't think it really matters much, what institution you're going through, because If it's a loan done legally, it basically has the same security, wherever it's being done.
It's about building that relationship with your loan officer, or that person that you trust.
I guess my
with.
fear is, we're going back in time to the Great Recession here. People were throwing mortgages left and right, and then as soon as you got the mortgage, they weren't around anymore. They sold it to somebody. They packaged it and flipped it, and sometimes 3 or 4 times you packaged it and sold it, and there were problems attached to that kind of stuff. Someone went out of business or whatever.
That still happens to a point. People buy mortgage loans all the time. In fact, I have one that just got reserviced last month.
And that might have happened back then. I don't know, but now too, there's always more regulation. There's just that keeps stepping up, and I think the transfer of loans between banks and mortgage banking firms, et cetera, is pretty, seamless now. It's not. There's not risk associated with it or negative connotations to the borrower.
So on that note, let's go back into the question I wanted to ask: is there any required counseling or workshop or knowledge that someone who is interested in taking a reverse mortgage out needs to do? Is it during an application process, or is there something that they need to do?
Yeah, that's a great question. We forgot to talk about that a little bit. But at the beginning of a reverse mortgage, the senior does need to do a counseling appointment. It's a phone appointment, or it can be an in-person appointment. Usually lasts about 30 to 45 minutes. And this needs to be done up front, and they go over the reverse mortgage and the numbers kind of proposed on the loan that they're going to get, just to answer any questions. And this call can be a conference call with the senior and the children on the phone.
Family members.
Everybody can,
So everyone can get a clear understanding of what's happening.
Your real estate agent could be on there.
Okay.
Anybody you want can be on the call with you, so you make sure you understand everything and everything's clearly spelled out.
And I think that's great, because at first I thought, what is this? What's this all about?
Yeah.
And once I learned more, I go, this is a really cool thing. So tell me just a little bit, what are the pros and cons to a reverse mortgage?
Yeah, the big pro, I think, is being able to stay in your home and to not have the monthly payments. That is very a big one, and I think also, the limited qualifying for the loan. Those things open up the door for a lot of people that can't get a loan and allow them to stay in their house. That's a great advantage.
That's awesome. Yeah.
I think one of the disadvantages is it can cost more equity this way, because you're deferring payments with interest. So the net
there's
out
fees
to
involved and interest involved that needs to be discussed and agreed to.
Exactly.
Okay.
And with the heirs in the end, maybe they'll get a little bit less than they would, with a reverse mortgage than a regular mortgage because of this, and that would be a con. So if someone really needs to do the reverse and there aren't other options, it's a great option.
So just on I don't mean to interrupt, but on a rate, is it based on a specific rate, or how does that, or more of a fee structure? How does that work?
There are different types of rates, fixed and variable rates, for this loan. So when you go to get a quote for one, you get kind of a breakdown sheet that will show you these different rates and fees.
Okay.
Yeah.
Gotcha. All right, great. So one question I have is, if the market takes a dive and the value of the home does not exceed the market value, what happens then?
Right. Well, the good thing about the reverse is you're never going to end up owing more than what your house could sell for in the end. So if you have this loan for 20 years and the market took a dive and the value went down, and you had to sell the property to pay back the loan, you're not going to owe over, if your loan's greater than the amount of the sale of the property, you're not going to owe that difference.
So it's just kind of like a little bit of a short sale in the end?
Yeah.
A little bit? The bank takes that write-off a bit?
Right, exactly.
And so typically you just said, if you've had that loan for 20 years, are there limits on the amount of time you can have this type of a loan?
No, there's no limit on the amount of time.
If you're 75 years old when you take the loan out and you live to be 95, it just doesn't matter.
It doesn't matter, and that's where the insurance part comes in. That's where this factoring of what they'll give you up front and how much they'll give you per month or however you decide to take it, that plays into it on your longevity based on your age and all that sort of thing.
I see.
Yeah, it's hard to put your finger on that to figure out the number.
Yeah, you don't really know. Yeah, I get it. So are there any final tips that you can tell us in regards to these reverse mortgages?
I would just say everybody's heard about them, and I would just say if you are interested for a parent of yours, or if you're interested for yourself, call someone that's a professional, have them run the numbers for you, see what you can get, and just look at everything overall and have a breakdown of it, and just check with somebody, and
get educated.
Get educated.
And get clear on what you're getting yourself into.
Yeah, and it's not that difficult. It's pretty easy to do. You can probably get it within a day or so, and you'll know if you can qualify for it or not.
I know your team's pretty awesome when it comes to that kind of
thanks.
stuff.
Yeah, thank you.
And so just a little bit here on the end to talk about some of the creative loans that you do, some of the jumbo loans. And
Yeah.
I know that recently, a lot of times with me, I'll have a buyer that finds a house and wants to put an offer in and then decides that they need a loan now.
Yeah.
And so I call you and say, what do we do?
Right,
So
right.
Sometimes I don't even know their financial situation.
Right.
So.
Can I get you a buzzer here? Because every time you say jumbo loans and things like that, there may be people out there that don't know the difference between a regular loan and a jumbo loan.
Okay. So the jumbo loan is the larger loan amount, basically.
Where did they start roughly today?
About, 490, somewhere in that.
So anything
amount.
over that, it's a different
right,
type of loan
right,
that you get.
right.
Right.
Yes.
Especially in Orange County where the prices are high.
Yeah, it seems like all the loans should
Or
be jumbo loans here.
right.
Right. But back to your question. So a lot of people can fit into the normal qualifying, W-2 people, people that have straightforward income. And other people cannot, so usually self-employed borrowers.
Real estate agents.
Yeah, real estate agents, right. Right. But
Radio broadcasting guys.
Yeah.
Yes. Now you're hitting home. Now we're getting real.
But there's some new programs out where we can use bank statements to qualify self-employed business owners. And
So that's kind of come back because that went away for a while. I know
Yeah.
when I bought my first condo years ago, I was a cocktail waitress.
Right.
And my ex-husband and I were able to show our income, which was substantial, but we, didn't have a weekly paycheck. It was a
Right.
lot of cash or
Right.
tips that we,
Right.
So you must have sold a lot of cocktails.
I did. It was in Maui. It was nice. I was making good money back then.
But yeah, so this isn't really like the stated income we had years ago, but it's
Okay.
more like a business that has legitimate sales. We can look at the business bank statements to show the gross cash flow per month, and then we can use those numbers to qualify borrowers off. And we see a lot of self-employed clients making a lot of money, but not reporting very much income on their taxes because of the way just the taxes work.
Right.
It doesn't translate over to the return. And a lot of times they can't get a jumbo loan, even though they're definitely qualified for it.
I know that, right? And so someone like me who might write a lot of things off, I have the income to show,
Right.
but in the end, I'm writing a lot of things off,
Right.
and then my actual real income that
Right.
I'm telling the IRS,
Right.
shh, sorry, it's tax day today, so so you could help me with something like that.
Right. That's right. Well, there's alternative ways to do it now with those bank statements, which makes it a lot more feasible for a lot of people.
That's great. And so
Yeah.
what about someone who is on the brink of really not qualifying? There are higher interest rates or short-term loans that someone could get to
Yeah.
be able to get into a property right away
That's
and
great.
then have a year or two to pay maybe a little bit of a higher rate. When I first went into real estate in 1995, interest rates were 10 3/4. So people forget that, I think,
Right.
and we're at that 4%. And even on one of these more creative loans, if it goes up to 6%, people panic.
Right.
But if it's a short-term loan that get me in, how would something like that work?
Right. So here's an example. A lot of times people will be selling a property and they'll find their other property that they want to buy. And they may have equity in the property that they're selling, but it's not out yet because the property's not sold and they want to buy another property. A lot of times we can use a short-term bridge loan to get them the down payment to buy another property.
That's great.
Or if
Yeah.
they want to just do a refinance on a property and do a short-term deal, they can do a bridge loan. And those type of loans, a lot of times do much lower LTVs, 60%, 65%, but they don't have income qualifying associated with them. So
LTV meaning?
Yeah.
Loan to value.
Yeah, loan to value. Sorry, loan to value, yes.
So an 80-20 or 60-40, it just
Right.
depends on how much the value of the property is versus how much they'll lend you.
Right, exactly. So if they have a lot of equity, a lot of times they can get a loan like you're talking about without a lot of hassle.
That's awesome.
Yeah.
Well, great. So I have a real kind of final question for you is, I'm also an artist and a photographer.
Yes,
And we've been
very good
friends
one.
for a while. But what do you do every day to get your creative juices flowing? What keeps you going? Because the mortgage business can be interesting, just like the
Yeah.
real estate business, right?
Yeah. I think what I try to do is in the morning before I start work, I try to just relax in the morning and meditate a little bit and have some time to myself, have coffee and just kind of relax and figure out what I'm going to do for the day and just kind of get my mind clear because I'm thinking about 20 or 30 things. And if I go off too quickly in the morning, without doing a little bit of planning and relaxing like that and setting my day out, it's always
I
messed
get
up.
it. I know.
Yeah.
I get it.
Yeah.
So tell tell our listeners how we can reach you to find out more.
Yeah. You can call me on my cell phone anytime, which is 949-351-5626, or you can email me at jr, the number 4, loans, LOANS, @gmail.com. And I'll get back to you, respond back to you.
That's awesome. Thank you, John.
Thank
Thanks
you,
for
Rosanne.
joining us today. It's nice to have you here. We'll try again to come back in a future date and
Sure.
talk about some other stuff.
Sure.
There's a lot of loan stuff going on.
Would love to,
right?
yeah. Thanks.
Yeah, thank you.
You've been listening to another episode of Keeping It Real, as in real estate. The only show that looks at the real issues affecting residential real estate right here in our county and across the country. On Orange County's only community radio station, octalkradio.net.